Chairman Powell, great to see you again. Thank you for all of your good work. I want to talk a little bit about the commercial real estate and what's happening there. The Financial Stability Oversight Council's 2023 annual report identified commercial real estate as a financial risk. And the Fed's monetary report also noted commercial real estate prices continue to decline, especially in the office, retail, and multifamily sectors. I'm especially concerned that because of the low levels of transactions in the office sector, prices have not yet fully reflected the true decline in the value. So can you expand on the emerging risks the Federal Reserve has identified in the commercial real estate market, one? And then I'm curious, can you discuss the compound risks identified in commercial real estate lending, particularly at banks with large CRE concentrations and high fractions of uninsured deposits?
Sure. Let me see. I think there are just very, very few transactions in commercial real estate right now, particularly in the troubled areas. So it's not a question of prices still falling. It's a question that you don't have the kind of price discovery. You just have to assume that the prices are very low and have come down a lot. So on commercial real estate, we have a secular change in people working from home. This is one big part of it. That means that in many cities, the downtown office district is very underpopulated. There are empty buildings in many major and minor cities. It also means that all the retail that was there to service the thousands and thousands of people who work in those buildings, they're under pressure too. And banks will have made loans to many of those buildings, not all of them, but many. So this we've known for some years. And so what do? We have identified the banks that have high commercial real estate concentrations, particularly office and retail, and other ones that have been affected a lot. We identify them, and we are in dialogue with them around, do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? And so we've been working with them. And so for some time we've been doing that. And this is a problem that we'll be working on for years more, I'm sure. There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first-order issue for any of the very large banks. It's more, smaller and medium-sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Thank you. Do you have concerns? Let me just ask you this. As you're talking with these small and medium-sized banks, because we know there's always could be a contagion, which we've seen in the past, do you have concerns that if they fail, that somehow this is going to impact the financial sector? And are you prepared and trying to address that and prevent that from happening?
We're trying to stay ahead of that. So we also reached out to banks that had high concentrations of uninsured deposits, and particularly uninsured deposits, and a lot of commercial real estate in the office sector. So we're well aware of that issue, and we're just trying to stay ahead of it on a bank-by-bank basis and overall.
Okay.
And so far, we've been able to do that.
Thank you. Let me jump to another issue that has been on my radar. The Federal Housing Finance Agency's report on the federal home loan banks concluded that the distinction between the FHL bank's role and that of the Federal Reserve discount window as lender of last resort has not been clear, especially during times of market stress. During the 2023 banking turmoil, we saw banks rely on advances from the federal home loan banks and didn't even have relationships with the Federal Reserve to use its discount window. I know you've talked a little bit about this with Senator Warner, but how is the Federal Reserve working with the federal home loan banks to ensure that banks establish protocols to borrow from the Fed's discount window prior to times of stress?
We work with the federal home loan banks because in many cases, banks were moving their loan from the federal home loan bank to the Fed. So we need to have smooth transfer. We need to be in good touch with them. Even more important than that, though, is that banks, any bank in the United States, needs to be in touch with the discount window, know how to be able to access it, be able to access it, have appropriate collateral, have control of that collateral. In many cases, it was incredibly inefficient and took a long time for banks to actually go through that function. The federal home loan banks are actually ahead of us in technology. We know that we need to really invest in technology to modernize the discount window, and also we need to do more to make to get our banks, all of them, in touch with the discount window in a way that they can use it quickly should they need to do so.
Thank you.